Hello everyone. UTI is coming up with its IPO soon. Here we are doing a detailed analysis of the company. UTI is the first AMC in India. It manages various assets like mutual funds, a PMS and an NPS. It is the largest asset management company in India with a total asset under management of 7.8 lakh crores. And AMC earned revenue by managing assets for its client, and its revenue depend on the type of asset it manages. An actively managed fund like an equity mutual fund commands a higher fees when compared to an passively managed fund like an NPS. It is also the 7th largest mutual fund with an AUM of 1.5 lakh crores. And within the mutual fund, its AUM is divided with 32% equity, 26% debt, 29% liquid, and 13% others. Its shareholders include public sectors like SBI, PNB, Bank of Baroda, LIC with 18.24% each, and an American asset management company, T. Rowe Price, with 26% stake. All these shareholders are expected to reduce the stake in this IPO, and T. Rowe Price is expected to remain the largest shareholder with 24%. Here it's a comparison of total AUM, peer comparison of total AUM. By this chart, UTI is has the largest asset under management with 7.8 trillion assets, and within that the PMS is the largest with near 5 trillion assets under, and followed by mutual funds and NPS. Next is SBI. The listed players like Nippon India Mutual Funds and HDFC. For Nippon India, assets are divided in between the mutual funds and PMS, whereas for HDFC, the most of the assets is in mutual fund assets, which is highly revenue generating asset. Comparing the market share in mutual funds, HDFC has the largest player with 14.7%, followed by ICICI SBI. UTI is the 7th with 6% market share. Here is a peer comparison of AUM growth from the period 2014 to 17. Here, bank-backed mutual funds like HDFC, ICICI, SBI, Axis, Kotak, they have grown over 200% over this period, 200 to 500%, whereas an independent mutual funds like Nippon India or UTI showed the good growth but slower than the bank-backed AMCs. Here, UTI over the last 5 years, UTI AEM, mutual fund AEM, has grown 115%. Here it's a comparison of revenue and profits with its listed players. HDFC revenue grew near 13.8% annualized growth from 17 to 19 and 30% profit growth. Whereas for UTI, it's a flat revenue and profit has seen a single digit degrowth. AMCs are seeing a strong demand from the investors. It's partly because of one of the industry leading or the sector leading industry growth. They have seen a very strong growth of 21% from the period 2014 to 2019. and this is backed by the changing saving pattern of Indian households. Indian households traditionally preferred physical assets, but the newer generation is preferring a financial assets, and the share of financial assets has moved from 33% to 38% from period 2013 to 18. And even within the financial savings, people are moving their assets from bank deposits to an higher yield generating mutual funds or retirement solutions like a NPS. In the past, we had two listed players, and past IPOs have seen a very good demand. HDFC and Nippon saw a very good response and was subscribed 83% and 81% respectively, and they had a stellar listing gains, HDFC giving 58% and Reliance Nippon with 17% returns. And post this, HDFC gave near 220% returns, and Nippon India has given 42% returns, and this is after the Reliance changing hands to selling stakes to Nippon. So I will be doing the valuation comparisons once the price is fixed. So I will be updating the video with valuation and the comparison with its peer post the price fixing. And if you like this video, please click like, and thank you for watching this video.